Hello and welcome to the trade on this Monday. Before we get into the charts, let's take a look at news out there. Israel and the US determined to thwart Iran's nuclear ambitions and its influence in the Middle East. Israeli Prime Minister Benjamin Netanyahu is saying on Sunday after meeting US Secretary of State Marco Rubio. And he says that Ukraine and Europe will be part of any real negotiations to end Moscow's war, signalling that recent US talks with Russia are a chance to see how serious Russian President Vladimir Putin is about peace. And President Donald Trump saying it was essentially shrugged off European Union's reported push to block imports of US soybeans and other foods made to different standards, warning such a move would only hurt Europe itself. And China's central bank governor saying on Sunday that a stable yuan has been key to the global financial and economic stability, and Beijing will continue to let the market play a decisive role in deciding the exchange rate. And shares of New Zealand's A2 milk soaring after the dairy producer declared its first dividend and hiked its annual revenue growth outlook, citing stronger than anticipated demand. Let's get into the charts that matter. Michael Gable joining us on Fairmont Equities. Michael, a happy Monday to you. Taking a look at what we saw beginning in the States, in fact the Nasdaq hitting another record. What are we seeing with the S&P 500 at the moment?
Yeah, they're both trading in a fairly similar way. The net result is US market still looks quite bullish from here. So we know the market has been trending higher for a while. Hasn't really made much progress since the start of December, but price action over the past several days suggests to me that it's about to just continue on to new highs. So this is a daily chart, and what I've circled there is essentially what's been happening since the end of January. So after the market in the US initially shrugged off those sort of losses from sort of late December, early January, the market's been trading sideways, consolidating next to the previous high, and that's a bullish sign, because if the bears were in control, then any rally would be sold off quite sharply. But we're seeing that any sort of profit taking up here in the S&P 500 is being met by equal buying. So most likely this resolves to an upside move, and in the short term it looks like the S&P 500 is about to break out and go to new highs.
All right, okay, so that's what we're seeing stateside. Let's now refocus on what we're seeing locally. Now, Michael, of course, we're in the midst of earnings season, and this has been the biggest week. We've already had a couple of biggies though.
Yep.
Let's begin with the biggest of them all, CBA. And what are you seeing on the chart? Because we've actually noticed a pullback today led by Westpac after its quarterly update.
Yeah, so continuing on with a theme of breakouts, that's what I've circled there on the charts, just a classic upside break. So CBA since November has been building this very clear resistance line near $160, and we could see that any time it was sold off, it was bought back up pretty quickly, and leading into the result last week, we did get a bit of a breakout. It followed through on the back of the result. It is down a little bit today, but I think as long as it's holding in the 160s, that's a buying opportunity. So I think a lot of not just investors but fund managers who should know better get very confused that CBA is going up because it's expensive, but it's, as you mentioned, Andrew, it's the biggest stock on the market. So people are not just buying it because they think there's value there or they like the dividend. It's clearly also being bought by ETFs and funds that are trying to track the index to some extent. They just have to buy it. So as long as the market's going up, CBA will go up with it. So I think it's actually a buying opportunity on any weakness.
Wow, all right, okay, so potential sort of further upside there for CBA. Let's get into what is now the second largest stock in BHP in the resources space, what we're seeing in commodities. How's this playing out on the chart?
Yeah, BHP looks like it's bottomed. So, and that will obviously help the market head higher as well, of course, with BHP being a large index weighting. So, we had that spike higher in September, very strong rally from sort of the 38s to the mid 45s, and then BHP pulled all the way back to retest those levels under $40. Coincidentally, it's mirroring what's happening with the US dollar. So yeah, commodities tend to move in the opposite direction to the US dollar. So, yeah, the US dollar went on a bit of a tear at the beginning of October. That coincided with a pullback in BHP, but it does look as though the US dollar's run is over for now, and we're starting to see some life in BHP. So essentially what we've got, I've circled there, is a breakout. That downtrend since the start of October now appears to be over, and I think we're going to get a nice little rally here in BHP. Of course, it goes ex-dividend pretty soon. I don't have the number off the top of my head, what it's likely to pay, but we know that the dividend's pretty chunky on BHP, especially you know, if you calculate the yield on a $40 share price. So I think we're seeing some good buying now.
All right, and that is ahead of its results this week as well. Now, still in the resources space, now gold has certainly been a beneficiary of that geopolitical tension that we've seen. It did attempt to take out the 3,000 US dollar handle. How's that translating as far as the local goldies are concerned? We saw the price come off on Friday. In fact, the goldies have taken a tumble today. Let's take a look at Northern Star.
Yeah, gold's had a bit of an upside movement in the past week. Maybe it's a little bit extended, and you'd expect a bit of a consolidation here, but I'd be using that as a buying opportunity. There's clearly still an uptrend in the gold price, and in the case of Northern Star, we've seen a couple of breakouts occur over the past several days. So yeah, about a week and a half ago, it broke above that diagonal trend line there, and then in the past few days, as I've circled, it's broken to a new high for the year. So look, I think the shares are down about 3% now. Yes, they'll consolidate around these levels, but I just think that's an opportunity. It's a consolidation within a longer term uptrend. So yeah, another breakout worth buying.
All right, and finally, a look at a smaller stock in Codan. What are you seeing here?
I really like this one. So of course they're due to report, but it's now starting to make a move. And the reason why I like it is because the consolidation that we've recently seen in Codan was confined to a very clear sort of rectangular channel there, and I've indicated that with the blue line. So Codan was trading sideways since sort of end of September. And what's good about this is when you do get a clear breakout, because it had been consolidating for so long, you should end up with a fairly decent move. So we're still in the early stages of that breakout, which is what I've circled there. I believe the shares are up today in a down market. Yeah, this one could push on, as you know, provided there's no nasty surprises in their result. I think it's later in the week. You know, this one looks like it could push on for a few months and give you a strong move. So this breakout looks like a buying opportunity as well. That
is Codan. Michael, thanks for talking us through the charts. Thanks for joining us from Fairmont Equities. And that is the trade on this Monday.